Good morning, guys, and welcome to this live streaming straight from Futex offices in Woking. Welcome to everyone watching, including those in America that are still up in California. So, yeah, welcome. Hopefully this can be a bit useful for you guys. At the moment this morning, we've seen a little bit of sort of risk-on type play with the equity sort of recovering off yesterday. But the sort of story this morning has been a little bit about the bond markets. The bond markets have gone very, very heavily offered this morning. At the moment, just looking particularly in the European bonds, looking to get on some of these flows. Tricky at the moment because every down move is met with an equal and opposite very strong bounce. So, it's catching a lot of people selling too aggressively. Instead, you're better off looking to just sell into higher prices. So that's exactly what we're going to do now. We're going to look somewhere around these German bonds, somewhere up here around the 85s, 86s to get short. Other than that, I'm not going to talk too much. Just going to do a few trades. I'll kind of explain what I am doing as we go along, and then hopefully we can actually make some money. So yeah, good luck and enjoy.
Regarding the conventional auctions, the median data, they say there was almost a unanimous call for two auctions of the 2025. For the long dated, almost all attendees have advocated at least one reopening of the 2045 index linker. Apologies for the 2045 conventional gilts, with possible support for two reopenings of that gilt. In all comments taken from the minutes of the DMO's meeting with the GEMS.
As you can see, as we're coming up here, there's still a little bit of a buyer that's come off this low, and he's quite intent. We haven't really seen an aggressive. There we go. Yeah, the first little bit of a seller steps back into the market around these 82s, so we'll try a short there and see what happens. Hopefully the buyer just disappears. We can see a little fight here, 81, 82. So seller has stepped back in at 82s. So let's see if the seller can actually, if he's still quite strong, if he's still got a lot to go. Otherwise, this could bounce a little bit higher up. Ideally, what we want to see.
China halted stock market support on a debate around intervention. So source saying that China stopped stock market intervention or support on a debate around intervention. Similar to what we saw at the Caixin Newswire overnight. Again, this source now the main wire is saying that China may have stopped their stock market support on the back of debates around intervention. Again, Caixin Newswires overnight had a piece suggesting that the CSRC, the Chinese stock regulator, was no longer so focused on trying to rescue the stock market and hadn't been concerned by yesterday's stock market sell-off.
As you can see, that seller stepped back in at 82s now. Now what we want to see is where, if there's going to be a buyer that's going to step back in, or if the seller's just going to keep selling down the page. So we can work a nice tight stop here as well now. It shouldn't be going really 83 or 83 bid, otherwise we're probably going to see this rotate a little bit higher, and we can just as well sell it higher. So let's just keep an eye on this, see where that buyer steps back in, maybe take a few off and take a few profits here. Other than that, it's full scalp mode right now. Whilst I do think the bunds will have a go at the 55s today, and there's definitely stops below 55s. It will be definitely a matter of timing. Either way, we're going below 55s today. It's just a question of when. If we could get that move now, it would be fantastic. But unfortunately, markets don't move in straight lines like I wish they did sometimes. As you can see, he's just right back at these 82s. Buyer's still there, he's quite a strong buyer. Not ideal if you're short, that's for sure.
Economists saying that China will be a bigger factor for businesses going forwards.
One thing I would say, guys, very, very important with these conditions and the low liquidity and all that, the trick for me and sort of the experience I've learned over the last couple of years is to navigate your way around these markets. Trade location is so key. You know, if you put yourself in the right trade location, you know, you don't mind the whipsaws, the couple of ticks or so, because when you get it right, you've got so much opportunity in your favor. But if you put yourself in bad positions, you know, let's say I'd sold 73, 74s, which is aggressive. Well, I'm not really wrong until 85, 86. So you take a lot more risk on having the wrong trade location. So important. You can see I waited for a seller to come in. Now I'm at a position where I can give myself sort of 18 ticks of downside opportunity, and in terms of upside, it's going to cost me maybe a tick or two. So I'm giving myself ultimate risk reward by getting good trade location. So important to understand that, you know, trade location in small ranges and non-volatile is important, but it's not as important as when we're trading in these conditions. Okay, we got another that trade now. This buyer's come back up to once, twice. He's not letting go of this buyer, so we'll sit this one out rather for a second. Yeah, we're also just going to, in a minute, we'll turn our attention over to the Euro stocks. We are heading towards yesterday's highs. I do think, given how aggressive today's move is, again, like I speak about trade location, I think somewhere around yesterday's highs at 31.80, just ahead of that gap. I think, you've given the downtrend, given, we're still very much in a risk-off type environment. I think first time up there, 31.80s, it should give you a very good risk-reward opportunity, to trade the market back in towards a little bit of, acceptable value. I think, we've had a very thin morning where we've kind of moved from 31.40s all the way up to 31.80s in a straight line with very little fill out. It's important that markets do fill out a little bit of value. So right now, I think Eurostoxx is just in a bit of price discovery, same as the DAX. Trying to find a range for the day, and I think once it finds that range, I think then it'll start to distribute, and you'll see the two-way trade come back in. So important you understand that, guys. Right now, if you look at the German Bunds, for instance, it's very much one-way flow. There's a lot more of an aggressive intent to sell the market, and the same with the Eurostoxx. There's more of an intent right now to be a buyer in the market, and once that changes, you'll feel the flick in the switch. Once you suddenly start to get the market moving up and down, that's when you want to switch away from trend following to scalping and then buying the market and selling the market and buying the market. So it's so important that you be nimble in these conditions, guys, because there's a lot of ticks on either side of the market to be had. So right now, I mean, for example, I'm looking at this bund and I'm thinking, well, that's a very aggressive bounce off the low. Whilst I do want to be short, I'm very aware that there is opportunity for me to be long and for me to take some ticks maybe back up towards 90. So we'll keep an eye on this. We're a buyer, we're a seller. We go where the opportunity is, and that's the job of a day trader. Yes, we have our opinions, and we have a bias or an understanding where we think the market should go. But ultimately, our job is to make money, and if that means we've got to buy and sell, it doesn't really matter what we do at the end of the day. $600 bund. and gone. Let's come back to those. If we get above these 83s, guys, we should see the bun just open up towards the 87, so we need to just try and see if we can get a few stops going through these 83s. Try and go with the flow of the market, see if there's something above these 83s. Can you go now, Max, so I can get the stops down at 50s, please? Yeah, so right now, just trying to scalp away, trying to nick a few ticks back down towards the 75, 74 area. You know, still trying to stick with the underlying trend, which is to the downside. You can see these 82s are holding. The seller is holding the market here. I do fear if we get above 82s, though, we could open ourselves up all the way back towards sort of double O area. So right now, whilst he's holding these low areas and he's absorbing, and we've got the equities nicely bid, you know, I can't help but see these buns at least having another go at this low, if not maybe a little bit of an extension on the low. So we'll try that same trade again. We need to get below these 75s. We get below there, and you know, we should see that buyer done with his order. So let's have a look how we trade through these 75s now. Okay, again, 75 acting as not necessarily buyers, but doesn't seem as though anyone wants to commit and sell below the 75, so we need to see someone sell. If someone can sell those 200 to 74, okay, we're game on then. I mean, someone's committing to lower prices here, which is what we need now. We need a little bit of commitment from these sellers to hold this market down. Right now, they're all buying. All these algorithms are buying out off these 75s for some reason. So we just want to pay attention to that. Price action should change, guys. Once these 74s trade through, the price action should be a little bit more direct. There shouldn't be a buyer anymore in the market. You should only see sell side action now through these 74s. It's very typical, guys. If you've missed this first entry at 82s, it's very, very likely that this bun will come back one last time and test that 75, that very area where we couldn't get past that sort of almost invisible support level. We'd expect 75s to act as a little bit of invisible resistance now. If we get back above 6s and 7s, trade's gone again, and unfortunately we could very easily see that bun start to rotate higher again. So right now, paying a very close attention to sort of each individual interaction point between buyers and sellers. Right now, sellers are holding this. 75s is a key for me. As you can see, I'm trying to add a few more in there. and hopefully we can get this moved back towards the lows now. Okay, and again, guys, as I'm doing a momentum trade, in terms of risk, okay, I don't need to. If 79's trades, my idea's gone. That's the important thing. I'm taking good risk-reward trade and good sort of trade location. So again, the worst I'm going to do on this trade, the worst I'm going to do is scratch myself. I'm not going to lose anything. And as a day trader, we'll probably be doing 20, 30, 40 of these trades a day. Where we're taking on ideas, where we're trying to maximize the opportunity but minimize the loss. So any trade where I can get 5, 6, 7 tick losses and I can have sort of very, very big upside. That's the kind of trades we want as a day trader. Okay, so we got the fill at 75s. Let's see the interaction now. We should see the seller step back in here at 75s and hold this price down. We've just got enough fill in the Euro stocks here now. Yeah. Seems very, very strong.
In 8 minutes, we have the beginning deadline on today's Spanish bills. Spain today is selling 3 and 9 month bills for a combined size between 3 and 4 billion euros. Previous cover on the 3 month, 7.2 area. For a 9 month, previously 1.8 times.
77 pounds. Fucking inside this shit. Why do I have a stop? That's the only fucking.
It does look as though the momentum's gone out of this trade, guys. So what we're going to do now is we're going to get out of this bund and we're going to try and move across into this Euro stocks and just focus a bit on this Euro stocks trade now. Again, it's a trade location trade, so what I'll look to do is I'll look to wait. I've got an entry, but now I want to look to wait and just see that sell side action come in. And once I can build a position somewhere around this 3180 area, I'm going to try and build this position up a little bit. As you can see, momentum's gone in the bund, trade's gone, and we've taken what is mostly a scratch out of the bund, so not the end of the world there. Okay, very important also, guys. The trick is, you're going to go a lot further off sides in these markets, but you've got to keep your head. You've got to just bear in mind that, for every 10 ticks I'm offside, I've got 20, 30 ticks of opportunity. So don't be afraid to go offside. Adjust to the conditions. Enjoy being offside. It's a very, the day you accept being offside, it's a very, very, almost enlightening feeling. It just doesn't feel that bad to be offside. You just got to remember, the market will rotate, it will balance. I mean, we're up 4% on the day. At some point, we're going to trade 31.78 today. So keeping that in the back of my mind, I'm not going to panic, I'm not going to worry, oh no, I'm 8 ticks offside. That's not the purpose of this. The purpose of this is, to just keep a calm head, understand that you're in a good trade location, you're selling the market where, there should be some sort of a resistance taking place, and then you just wait for the sellers to, start becoming a little bit stronger, wait for the buying to disappear, a little bit of panic buying, maybe there's people caught on the longs, wait for them to get out, and then we should start to see the market just rotate a little bit lower and put us on sides and hopefully make a little bit of profit on this one.
Yeah, there's no one. It's fucking flipping.
Okay, right now, if you look at the Euro stocks 1 minute particularly, we're hugging onto the 1 minute moving average. So right now, I wouldn't be surprised, if we see the Euro stocks come back down towards a 70, 71 and then bounce back off again and start to form some sort of a higher, some sort of a top out area. Again, this is not the high. I'm not calling this the high. I don't think this will necessarily be the high, but it's an area where I think, based on experience, where sellers should start to interact with the buyers and they should start to take hold of this market and try and protect this area. So that's the guys, so important. I'm not looking at a chart thinking, where is the level, where can I sell the market. I'm thinking, where are the sellers going to interact with buyers? And then I watch. I make sure I look at price. I make sure I watch what's going on, and I can see very clearly. We can see there's quite a lot of absorption going on here. So the two-way trade exists.
Stopped again. Stopped a fucking game, and I'm done. But I'm so right. We all know it will fucking go down. But we stopped after red. You know it's gonna extend 10 times more than usual. And I'm fucking managed to be down. Already 2 grand losing like that just for fun.
Okay, this is yesterday's high 88s in the Euro stocks. So again, let's watch the price action around these 88s and see what happens on a little extension of yesterday's high. Let's see how the sellers interact in this Euro stocks at yesterday's high.
It's gonna go another 10-6, you can be sure.
Do you think the gap filled the Euro stocks?
Okay, a little bit of a double top almost. We're going to try a little average there, and we're just going to put our stop just above the high there. See if we can get away with a little bit of an average here. Time the average and see if we can just manage our price a little bit better. That's what it is, guys. It's a management. I'm taking the risk, but note, I'm willing to cover that risk. I haven't lost control. I'm willing just to try and manipulate my price a little bit. And ultimately, if I get it wrong, I'm not losing. I'm not adding to a losing position. I've got the stop in for the average. So important, guys. Averaging is a part of trading. It's a skill you have to learn to do. But more importantly, you have to learn to do it the right way now. Some of Futex's most successful traders are very good at managing their positions. And it's so important you learn to manage your positions, guys, because when the markets are like this, I haven't lost control. I still want to be short the market. I understand this is yesterday's high. I understand we could see stops through yesterday's high. But equally, I know that somewhere around here, I can manage my position as a seller and hopefully eventually get my down move. So I'm in a little bit early. I haven't got the best price, as you can see, but I'm managing the position. Constantly managing, not panicking, managing.
Just impossible to trade. If you take the trade, you lose. If you don't take it,
Cool.
every single time.
475. Okay, we are into the gap territory now from yesterday. So the gap is from 89s all the way up to 08. So again, very important gaps. They are low volume areas, and low volume areas, will become effectively high volume areas in time. So what that means effectively is as we enter this gap, we will have a tendency to spend a lot of time, maybe not today, maybe over the course of the next couple of days, but we will spend quite a bit of time accepting the gap area or the low volume non-traded area. So important you understand that. As you can see now, we have popped yesterday's high, we've extended it by 2 ticks and we've come straight back inside. So we're going to try again, and we're going to try and add on to the short now. We've got a little bit of price action, we can work a stop so we can manage our risk. So important, guys. Again, note, I'm not trying to call a top, I'm not trying to create anything. All I'm doing is I've noticed a failed extension, 2-tick extension, market's gone instantly offered after all this absorption. There is a seller up here. Someone is looking to sell this market at this area. Now, what I'm looking to do is manage my position, which is effectively why I've got the stop above today's high, and more importantly, why I'm looking to now add into this position and start building a bit of a position which I can hopefully make some money on. As you can see, guys, unfortunately, I'm not going to add at lower prices. And again, this is it's a mistake so many young traders make. They want to sell these 79s and 78s because they're not full, simply because they feel they've missed the high. Now, if I sell these 77s, I'm skewing my risk, guys. I'm creating a very, very untidy risk-reward opportunity for myself. So I just accept that I've missed the trade, and hopefully I can get a bounce which I can sell into. So again, guys, trade location is so important in these conditions. As you can see now, we're approaching that you know, the 20-minute EMA, which the Eurostoxx has now respected for a good 4 tests. It comes in at 74s, so we're going to look to cover this position and actually try a little bit of a cut and reverse scalp here. We're going to try and nick 2 ticks on the quick bounce, try and see if we can get one of those algorithmic type program trades going here.
Supermarkets, Kantar releasing their latest sales data. Tesco's 12-week sales down 0.9%. Their market share at Tesco's 28.3%, below the prior 28.8%. Sainsbury's 12-week sales actually up 0.1%.
Massive, massive, massive. And fucking.
You guys see the 1-minute flag in the button now, yeah? Max?
Sainsbury's market share actually smaller as well, 16.3% down from the prior 16.4%.
85, 86.
The general theme stays the same. Aldi and Lidl will be discounting and continuing to take market share from the big guys. The UK 12-week grocery prices were down 1.7%. So again, Kantar report the UK 12-week grocery prices.
So again, looking to buy that moving average, just looking for a pure algorithmic type trade, in and out, nice and quick. Not looking to do anything special. Risk reward will be 1 for 1. You know, if I went 2 ticks aside there, I'm gone. Okay, so it's so important. You see these algorithmic trades quite often, and they can work very nicely. Now, what we're going to try and do actually is we're going to try and get in on the short. You know, it looks like we found a short-term top. We've seen the absorption around the sort of 82s to 87 area. There is a seller there. We saw the sort of the very aggressive seller come in once we extended yesterday's high. He's taken the market straight from 90s down to 74s. So there is sell-side action here. Now is the time, guys. Not before. Not pick the levels. Not pick the resistance. Now is the time. You've observed there is a seller in the market. So now's the time to start looking for short side opportunities. And maybe, if you want to be a buyer, remember we have done a very big up move in a straight line in a downtrending market. So just bear that in mind. If you're a buyer, obviously look for buy side opportunity. But for me right now, I'll only be looking for buy side opportunities somewhere around the sort of 40s area, about 30 ticks lower, somewhere around this sort of price area. That's where I'll be looking to buy some sort of a pullback in the Eurostoxx. So just keep that in mind. We should start to do a little bit of distribution now. So yeah, just keep that in mind, and hopefully we can get a short off here and we don't miss the boat altogether. But again, guys, note, I'm not going to sell 75 and 76s. Why? Because my risk is up at 90s. That's where I'm wrong. That's where, if I want to be a short seller now, I've got to accept that's where the area is to stop at. So any bounce here now on low volume, as you can see, these offers are being pulled. So any bounce here on low volume, I'm in, and I'm in for the good now on a nice short opportunity with a stop above, obviously, today's high. So important, guys. You can see it's just a very, very weak little bounce. There's not much volume, not much intent from the buyers here. They're not trying to force their way higher. It just seems as though the offer is being pulled away. You can see this. It's representing 1,000 lots, but it's only really about 200-300 lots that's actually lifting the offer, and that's important to pay attention to, because these are the kind of games that get played, and you can see how these offers are getting pulled away. Again, their note, how they're getting pulled 80s, 81, 82, all showing 1,000 plus, but actually only trading about 200 lots to lift the offer. Come on, Eurostoxx. Patience is a virtue in this job. It definitely is. Huh? Don't worry, that short's still there, mate. The opportunity's still there now. There's definitely a seller sitting up here, so we'll get another chance. We'll get another bite at the apple. Remember, we got downside all the way to at least 55s, 40s in the Euro stocks if this is the top. We got a good 40 tick down move to play with.
German economy minister here, so he's not worried about the impact of China developments on Germany.
Okay, we can see these. You can see these offers are becoming a little bit harder up here at 81, 82. So we're gonna try and get some in here.
Developments in Germany.
Hopefully get some short.
It's definitely what you see in the headlines.
Okay, so we've got a fill there, 81.
With the US equities. The S&P 500 day year end.
It's so important. What we definitely don't want to see is we definitely don't want to see that Euro stocks, retest the high. We're almost better off seeing this Euro stocks do a lower high here now. At a point, what you've got to remember about buyers and sellers interacting is that we saw a very aggressive seller sell down to 74s, and the higher it bounces up, it shows a lot about the strength of the sellers that sold it. So important, as you can see now, it stopped at 81 and someone's just deliberately taken this 7 tick straight offer. So again, guys, there is a seller sitting up here. It does look as though we're going to start distributing lower prices now, maybe just moving back towards a little bit of lower area, 55, somewhere around there, before the market then just distributes and finds a bit of acceptable value.
The German economy minister saying that the German economic development are being helped by good European trends as well as low oil prices. And more comments from the Iranian oil minister saying that the oil price is determined by the market. For Iran should sell its oil whether the price falls or goes to 100. So the Iranian oil minister essentially reiterated that Iran is going to look to sell their oil once sanctions are lifted no matter what, irrespective of oil prices.
Wowzers.
Can I get my 88 back?
Unfortunately, sitting here with very little on. Didn't get filled 82, 83, 84. So again, pyramiding is a dangerous job in this. Is dangerous in these conditions simply because of how aggressively it can whip back. You skew your risk reward if you don't pyramid correctly. Averaging and pyramiding are in essence both very, very important skills to learn, but you have to have a methodology behind them. Just like I showed you how I averaged earlier, that's one way to do it. There's a very, very strong way to pyramid, and it's important that you learn how to pyramid correctly. So what we will try now is we will try a pyramid, but we're going to note we're not going to sell aggressively on the downtick. We're going to pyramid into upticks. That way, at least we know we're selling higher prices and not selling sort of in the hole where potentially we could see an aggressive straight line move off. So as you can hear, another trader just talking about these fake bids, all of it not real, none of this is real, it's just algorithms, computer programs doing something, manipulating the market in some way to try and benefit their orders. It's very difficult to interpret what they're trying to do a lot of the time, but in essence they're just managing positions just like we do. They're just managing a position. They're getting in and out of thousands of little individual contracts just constantly over the course of doing millions of contracts, just taking very small increments out of the market. And again, guys, it's the algorithms are a very successful methodology to trading. They have a very specific way. They have very strong intent as to what they're doing, and there's obviously a lot to be learned from that for traders. It doesn't matter what you do in this market, right or wrong, as long as you've got a process that in the end gives you 51% success. That's all that matters. Over time you will make money as long as you're beating the market on average. Right now, just having an eye on the spoon, if we can get below these 70s, it is the break of the flag trend line to the downside. We will try a short through 70s. Again, you can see the Bund is sort of distributing in the lower end of the day, so quite a bearish little move. But hopefully we can get out of this Euro stocks before we move back into those Bunds. Okay, we're going to try and find a little bit of an interaction point here, and somewhere where You know, we've last seen some interaction now. For me, 59s, you know, if you have a look, somewhere around this 59.60s was, you know, as we were coming up, there was a really big buyer, you know, executing his order around 59s and 60s, looking to try and, you know, finish off before he then took the rest of the market. So right now I'm going to look to cover this trade at 59.60s. Again, I'm going to try to cut in reverse. I'm going to try a quick little bounce trade, just a scalp opportunity, and we're going to see what we can try and get out of this trade.
Oh my god, I'm so shit. Cleaning massively.
Okay, so we've got our fill, we've got our cut in reverse. Okay, we can see that interaction, guys. Note the reload at the 60s. Came down, filled the 60s, and again's gone bid. Okay, so we can see the little bit of absorption. There is still a buyer sitting at these 60s, and let's see him. We want to see him take it to the market now. We want to see this offer become weak, and we want to see the market get lifted off and back up the page again. Okay, and that's all these little interaction points are, guys. It's the point where buyers and sellers have previously interacted with one another, and where they're likely to interact again. Now, that does seem to be a good little low opportunity, those 60s. So right now it looks as though we should start to range between 60s and 90s. So we're still going to keep the same idea. We're going to look to sell into upticks. You know, this is now a good little resistance area. We can see very aggressive intent from sellers up at this high. Now we need to go and find out where are the buyers going to take a stand in this market. Where are the buyers going to step in and say, well, hang on a sec, this is a good location for us to start, you know, accumulating a position again, and then hopefully distributing. So we've got a little bit of an area here at 60s. You know, we'll try it again, maybe a little bit of a smaller clip, you know, see if we can get a second response at 61s. You know, and then hopefully the market can bounce back up towards the 72, 73s. Again, guys, note the difference. The first trade where I wanted to be short, I wanted to position trade the market, I was willing to take a full stop. I was willing to take my stop all the way, whatever it was, 6, 7, 8 prices, doesn't matter. That's position trading. I'm looking to position myself in a good location and trade back towards where I deem, you know, profit taking or the move should fizzle out. Whereas when I'm scalping, so when I'm literally just looking to do some sort of an automated type trade, some sort of a very mechanical type trade, my risk reward is completely different. I'm looking for effectively maybe 1, maximum 2 tick stops. So note the difference in style, and this is the thing as traders, you need to develop different styles for different conditions. So we're going to try this again, try these 61s again, see if we can get a little interaction, see if we can be a little bit cheeky, nick another 2 ticks out of the market, and just keep accumulating. You know, that's the objective as day traders. You know, yes, we position trade, yes, we hold trades for the bigger moves, yes, sometimes we hold a trade for a day or a week, but ultimately our job is to take those little incremental moves and just accumulate and build a day, and you know, make money that way around. So again, as we can see, to note, we've got a 2,500 lot at 70, and we've got a 2,500 lot at 63s. Now, watch the interaction here, guys. Someone's doing this very purposefully. Okay, so as you can see, the 2,500 on the bid disappeared. So make a mental note of that. There's a game being played, and you have to understand the game, because you're not playing your own game. You're playing the game of the institutions, of the bigger players, and they ultimately dictate which way the market goes. So important. Note these things. You know, write down, saw 2,500 on 63s, then saw 2,500 on 70s. What occurred? You know, if I watch this video back, I want to know exactly what occurred between this 2,500 lot, because if all of a sudden we find this goes back up towards this 2,500 lot, and then comes back down towards 62s, then all of a sudden I have an idea or a pattern recognition in my head that if it occurs tomorrow, if we see a 2,500 lot on both sides of the market again, we could ultimately you know, take advantage of that pattern if it occurs again tomorrow, or maybe even today again. So that's why we pay attention, guys. We always pay attention to what price is doing. That way we can benefit from you know, the market when it repeats its patterns. So again, we're going to try these 61s. Again, a smaller clip. We're not going to go in as aggressive as the last time because the probability is diminished now. But we'll keep trying that trade. We know there's support here at 60, 61, so we'll keep playing in front of it. We'll keep trying to you know, just scalp the market at these little areas. And if we get back down towards, like I said, this 40s to 38 somewhere there, then we'll position trade the market again and look to take some sort of a stand in the market. By the way, guys, if you have any questions, obviously I'm not going to get my Twitter up right now. You have got me on Twitter. Feel free to ask me questions over the course of the day. You know, happily answer them over the course of the day when things calm down a little bit. And yeah, if you have anything you want me to go over in the debrief this afternoon, again, just, you know, send me a Twitter. You got it on Twitter. Obviously, this is for your benefit, and hopefully you guys can learn a little thing or two. It's yeah. So let's pay attention back to these 60s, 61s. Again, let's see what happens now. We can see the market slowed down, the price action has slowed down, but more two-way trade going on now around these 60, 61s. So let's see what happens if we take that 60 out. I would expect a little bit more of a gain, a direct offer to come back into the market, and then we filter just a little bit lower into the range. Okay, so we're starting to trade these 60s out now. Let's see how we interact below 60s. And again, guys, if suddenly we can't get below these 60s and the market starts to go a little bit bid, okay, I might.
Seriously?
Okay, there's quite a bit of absorption going on here, 60, 61. So that area from earlier, we're actually going to try a little bit of a long here again. We're going to try and scalp this again to the upside, see if we can get maybe a little bit more of a bigger move here now, because there's clearly someone sitting here accumulating 60, 61. So we're going to try this long again, and we're going to see what we can get out of this one. We're going to try and hold on to. Maybe there's something bigger here. Maybe there is still a big buyer sitting 60, 61. So we're just going to try and see if we can maybe get a couple more ticks than in the scalp. So let's see what happens around this 2,800 lot. We're gonna try and get out in around him and see what occurs around this 2,800 lot, because the market's definitely not intent on going below those 60s just yet. Okay, again, note the stop, guys. Put the stop straight at 59s, put it in the right area. Taking sort of one for one type of risk reward, not looking to take a position, just looking to scalp the market around. Okay, again, someone's sitting on these 67s, just looking to sell the market off the 67s. So we can see in the seller sitting here, still quite aggressive. Okay, let's watch how it interacts on above 67s now. Someone's selling it off the 67s. Okay, so let's see if that bid goes firm and holds the bid 6s and 7s. Let's see how the market responds. Let's see the response the sellers give. So 7s lifts and straight to the 8s. Okay, so we can see a nice buyer step back in here. 7s are holding, 7s are holding, 7s are holding, and the selling's gone. Oh, and a little bit of a blip. Okay, that was quite a big order, that. And we're out. Okay, very important. If we look at the order book here, you can see someone just sold about 3,500 contracts there at market. So a very, very aggressive seller sitting between 67s and 62s. Again, guys, note, not asking any questions, not averaging, not looking to do anything silly. I knew the idea was a scalp. I knew my stop. I understood what I was trying to achieve. So again, had that been a position trade, all right, I might have been a little bit reluctant to get out there, but remember, I was scalping. I'm not looking to take a position. I'm not looking to be a buyer at these prices. I'm looking to be a buyer down at these prices. So note the difference in the position trade and the scalp trade.
So Finland wise, initial price loss, bid swaps minus the high single digits. Again, the fact this deal has been mandated and was announced earlier on today, and was one factor cited for some of the weakness we've seen in bids since.
Okay, so we can see a nice aggressive volumes picked up there. Someone sold a good couple of thousand contracts there. And note where the stops came through, guys. 60s. Okay, we saw very aggressive stops, continuation through 60s. So 60s on the way up acted as very strong support. The buyer was defending that and absorbing it before taking the market higher. And now it's broken through, taken stops to the downside. So it's an interaction point. You know, every one of you should be writing, if I can find my pen, every one of you should be writing down 3160 as an interaction point. It's a point at which today I think is going to play some sort of form of a pivotal point. So I'm going to turn now and I'm actually going to try and sell these 60-61s and see, sort of if it is acting as a point on both sides now, a point where I can effectively look to be a buyer and a seller above and below it.
10-year will be 3 billion euros. So Fitton's saying that the 10-year size of their deal will be 3 billion euros.
Okay, so as you can see, guys, someone else has a similar idea to me that these 60s are a little bit of an important point here. So we're going to try 60s here, and we're going to see what happens off these 60s. Keep it nice and tight, not looking to do anything too scary. If we can keep it tight off there, just to see if there is an interaction here. Okay, we're going to get out of this trade now. As you can see, it's not quite responding like we thought it would. We're seeing too much buying coming in and around those 60s, so not an ideal position. We're just going to get out, sit back and see if we can find something else. But again, guys, so important for new traders, for even traders of my level that have been a couple of years. It's so important just to try things. What are you going to lose? You're going to lose a little bit of money, but you're only going to gain experience. The mistake most traders make is they fear being involved, and the problem is being involved now. I know fine well, having watched this and having spoken to you, I know fine well 60s is an important juncture. It came down. On the way up it acted as a support. It came back. It retested. It acted as a support. It now went below it, took some stops. And now it's come back above it. So it's almost making me think that maybe this was a little bit of a squeeze below the 60s, and we're now going to go back a bit up the page. So again, I'm learning, I'm gaining information, and yeah, sometimes I have to pay for that information, unfortunately. But now I know that maybe that was a little squeeze, and I'm going to try and get long again for that up move back towards sort of 78. So we're going to try and get long again. Unfortunately, that was a little bit of a squeeze through the 60 areas, but now we know that there's a good area, 60s to 62, somewhere where it could be a good opportunity to get longs off. So we're going to try this trade. This is what I would typically call a bit of a squeeze trade. The market sort of went below the 60s, took some stops to the downsides, come back up above. It should come back and retest 60-61, maintain the support level, the original support level, before then moving up the page. So this will probably be our last trade of the day. Hopefully we can have a successful one. Hopefully you guys can learn something out of this and take it away. Go and look at it, look at the charts. More importantly, watch your ladders back, watch the price ladder back, and try and get an understanding of what I'm trying to explain to you guys, so that going forward you can ultimately come better at reading buyers and sellers interacting. It's so important, guys. I cannot stress this enough. Ignore the charts, all right? If you watch me trade, you'll very seldom see me look up at the charts. I know where I want to be interacting. I know where the major points are. But more importantly, I want to watch where these buyers and sellers interact, because that ultimately is going to dictate where price goes, not the charts. The price will dictate, and the interaction between buyers and sellers will dictate. So let's keep an eye on this. We've come back to retest 60s. Again, probably keep a stop of 57s. If that goes, trade's gone, squeeze is gone, and my head is probably gone, and I should probably take a little bit of a break because I'm being tossed and turned around. So that's the objective. Yeah, one last trade, one last opportunity to take on. Again, note, minimum risk reward. Not going to lose much. Going to lose 3-4 ticks, and I'm looking for some sort of an upside move back up to 73, 74. So again, if I lose, so what? I'm not going to lose anything. I'm going to gain information. If I make, I'm going to make good risk reward, and my process ultimately is very good. So let's just watch this and see how this pans out, and hopefully finish on a high here. And then if you have any questions, obviously you guys can tweet me. Okay, so again, note if you look at your chart, and I don't need to look at the chart really, but I can tell you now where the low was, because it was the very same point that we bought the first time. 60-61s, came down, retested, bounced, failed to bounce, then came to 61s. There was a very big sell side order that went through, took some stops to the downside, came back above 60-61s, came to 64s, came back one last time, tested the original support, and it's given a thumbs up, and now we're going back a bit again. So let's see if we can get this back up a little bit higher, and hopefully make some money before a little bit of a tea break. Okay, as you can see guys, so note now, we're going to finish off here in the next minute or so, but just to point out, notice how the price actions changed. Now the first sort of hour of trade this morning was very, very intentional, strong flow side bid action, and that's the important thing. There was strong buy side action between 8 and 9 o'clock. Then 9 o'clock sort of, we sort of almost topped out, found a little bit of, there were quite a few people caught short I think this morning, too aggressively, and that kind of made us get very aggressively to the highs. The market then sort of almost overextended, the little extension on yesterday's high, and then it sort of, once all the sort of anyone caught short was out of yesterday's high, it then sort of very quickly moved back towards more acceptable levels on the day, and now we're kind of sitting in and around this 31.61. But note the two-way trade. Okay, there's a lot of interaction between buyers and sellers going on now, and that's the important thing, because now you know that the momentum is disappeared from one side or the other, that you can start to look to scalp on both sides of the market and be a buyer and a seller ultimately. So we're going to finish up there. Thank you very, very much for joining us. If you have any questions, please feel free to tweet me. Otherwise, good luck for the rest of the day, and hope all goes well.